Good morning, everyone. I am Forrest Bennett from Oklahoma. I represent the district where the number one seeded NBA team, the Oklahoma City Thunder, play. Thank you. Thank you. This is not a basketball conference, but I will be talking a lot about it because I'm very proud. We do not need a roll call. Ann is going to mark everyone's attendance. Before we get started with the agenda, I want to remind you about the comment procedures during the meeting. If there's anyone in the audience who is not scheduled to speak but wants to, you can fill out a testimony slip, and those are on the speaker's table. After completing the slip, you can just submit it to me or whoever is staffing the committee, and I would recommend whoever is staffing the committee. So now I will entertain a motion to waive the quorum requirement. Moved and seconded. Thank you. All in favor, please say aye. Aye. All opposed? The ayes have it. Now I'll entertain a motion to approve the November 24, 2024 and February 14th, 2025 meeting minutes, then a second, and then a voice vote. Do I have a motion? I have a motion. Do I have a second? Second. I think there was more hesitancy because that second meeting was scheduled on Valentine's Day. That wasn't my fault. The buck usually stops with me, but not on that deal, okay? All right. Well, we're pleased to start this meeting. Wait, no, I need a voice vote on that. So I'll get the motion in a second. All in favor? Thank you. Sorry, brain's just starting up. We're pleased to start the meeting this morning hearing from Michael Jaworski. He is the Florida Insurance Commissioner. Michael, if you can let me know that I pronounced your name correctly and introduce yourself, I'd appreciate that. The floor is yours.
Thank you so much. It's actually a rare treat for my name to be pronounced correctly, and you succeeded. So thank you so very much for that. My name is Michael Jaworski. I'm Florida's Insurance Commissioner. I've been the commissioner since about the second month of 2023, and overseeing our marketplace in its recovery phase from several years of a downward trend in near crisis. And I'm here today to speak about Florida's tort reform primarily, and some other reforms that Florida enacted at the peak of the crisis in 2022 and the first part of 2023 to address the near collapse of our marketplace. Next slide, please. Is there a clicker? Great. Thank you, sir. Just a quick overview of Florida's property insurance market in the admitted space. We have about $3.8 trillion in total insured value on the property side. We have 7.57 million residential policies in force as of last month. We have on the Citizen side, which Florida operates with a corporation called Citizens that is our insurer of last resort. We have approved 1.3 million policies for takeout out of Citizens. Citizens property insurance, we'll go into this later, but it has substantially depopulated in the past 2 years, moving to a more sustainable space. And at this point, the 30-day average for for requests for homeowners property insurance rate increases stands at 0.5% in Florida. So to go back a little bit, just real briefly, about what led to the particular crisis in Florida and the near collapse of its marketplace in 2022, primarily driven by 4 factors. Inflation was a key factor. The total insured value of Florida's property insurance market went up between 38 and 50% between 2020 and 2023, leading to, when just naturally and inherently, when you have more rates, when you have, what we approve as state regulators in our system is the cost of the rate involved in insurance. And so if you look at it in simpler terms, what I always like to say is that the rate is setting the price per brick of insurance you need to rebuild your home. It is not setting a price around the number of bricks you need to rebuild your home. And so when you have more value in that space, more cost in that space for labor or materials to replace the total insured value of your home, you're naturally going to need more bricks, and your cost is going to go up in that space, and that's an unregulated area. Second key one, which will be the discussion point mainly today, is litigation. Florida accounted for in 2019, to give an example of the litigation environment we had, we accounted for about 8% of all property claims in the United States and 76% of litigated property claims in the United States. And then, of course, we had, after about a decade of no storm activity, we had a series of storms beginning in 2017 that impacted the state with Hurricane Irma, all the way through to the most recent events we had, which were Debbie, Milton, and Helene. And then, of course, what you kind of see is reinsurance. The cost of reinsurance increased dramatically during that period. We went from a space where we had, to give it one example that's substantial in pre-reform and post-reform, we saw rates of the cost of reinsurance for our insurers operating in the state go from about a 50 to 60% increase in the cost of reinsurance pre-reform to today about a 1% decrease last year post-reform, and we expect pretty good news coming out of this year. We gather data on a pretty sophisticated level on what reinsurance is looking like year over year, and so we're in phase 2 of that, and we're looking towards a moderate reduction in the cost of reinsurance again in the state of Florida. One of the things that led to a calamity is that all of these things, probably in a one-off scenario in Florida, would have been sustainable. It was really all 4 of these factors kind of ringing each other's bells and exacerbating each other that led to an unsustainable situation and near collapse in Florida. So a number of things were enacted legislatively. It took the leadership of the Speaker of the House, the Senate President, the Insurance Commissioner, and of course the Governor to enact a series of reforms aimed at stabilizing our property market and building in some long-term sustainability into it. I won't highlight all of them individually here. We'd be happy to talk separately about them. But there were a couple of key factors that were influencing Florida, particularly, especially on the human aspect. The one that we can control the most as a state was the social inflation factors such as litigation. We also, so to that end, Florida had a relatively unique law on the books that allowed for what we call the one-way attorney fee statute, which had been around in the books in Florida since Reconstruction, that effectively said if your insurer offers you $1 for your claim and you refuse that and you hire an attorney, during the course of that discussion, as the attorney is billing for that service provided, if the end settlement is $1 more than $1, so $2, $1 or more that you end up getting as that claim is resolved one way or another, then all of the attorney fees were automatically paid for by the insurer as well. And of course, what we know when we discuss attorney fees, it is not a situation where it is a corporate entity itself that is paying for those fees. Those fees go right into the rate next year and are incorporated into that, leading to a higher LAE form that winds up costing all consumers more. So it's really a cost transfer from one policyholder to all policyholders. The second thing I'll just highlight in this space is the Senate Bill 7052, which was really one of the first bills I worked on prominently when I became commissioner, which was the Insurer Accountability Bill, which was the messaging that we tried to give to the public and to legislature was we can't just take away a concept that you can regulate through litigation. If you're gonna pull that back and put some hamstrings on that, you've got to make sure that the state itself can step in that role and regulate this space appropriately and protect consumers. So a part of that package was a number of new laws that were placed on the book to ensure accountability in the space and make sure insurers were moving in the right direction. It gave the office several $1 million more in resources and added 29 staff to our market conduct section for insurer accountability. So looking at the outcome, and we'll go through a number of outcomes post-reform now, just looking at them, this is the first one. This is the underwriting income and net income for our market over the past several years, and you can kind of see what I always refer to as the golden age of property insurance in Florida there in 2011 to 2014, where everything was just firing well. Companies were making a profit. There was income coming into the state. And then we get to that 16-17 period where we started to see the opposite take place. Tremendous losses began to build. And that correlates very, very well with our history that we have developed on the propensity for litigation in the state. Again, it wasn't the only factor, but it was a major factor and an increasing factor. We saw the state of Florida went from about still a tort-heavy space in 2000 2012, about 26,000 lawsuits a year in the property space. It accelerated to the end into 2022. We were at over 100,000 lawsuits a year in the space. That was all ultimately passed on the consumer. And the challenge in this space, while you see that loss continue, you wind up in a situation with rate making where you simply cannot raise rates high enough, quickly enough to accommodate any increased losses. And so we saw this exacerbation take place. And you see now post-reform going into 2022, 2023, we see good, solid profits returning to our companies. Insurance is, in my view at least, is not a space where you're meant to make massive profits. It's a moderate long-term strategy in place, but we see now we have healthy returns on profits that are coming in, and we'll continue to monitor that as that goes on to ensure that profits aren't in an excessive space. Just looking at this, as I mentioned earlier, Citizens, which is our state's insurer of last resort, us in Louisiana are unique in that we have an actual insurer corporation that is owned by the state that monitors that provides a service. The view that the state has taken is that Citizens should be an entity that is designed to provide comprehensive coverage to individuals who cannot find coverage elsewhere on a relatively affordable basis. It's designed to be able to have the capacity to rapidly grow when the market gets into a distress point, and then rapidly shrink through legislation, through the law, when the market conditions are improving. And so, to give an example, when Hurricane Irma struck, the Citizens had about $9.2 billion on hand in additional surplus and capacity to be able to grow rapidly as that market deteriorated. Today, post-reform, as we see that population has shrunk, it still sits at about $5 billion in surplus, and it's beginning to grow very rapidly again in the surplus space to kind of put away cash and surplus for another rainy day down the road. So far we've seen a pretty substantial depop over the past couple of years. The takeout process is a statutory function, but it's been a pretty successful run. We're down to about 800,000 policies from our peak of 1.3 million, and we expect it to continue to depopulate throughout the year. The litigation trend within Florida, looking at the numbers, we monitor a number of different systems and composite and data points to determine what the litigation frequency is. This is probably the most. This is our pure service of process database that we use to determine what's going on in that space. And we kind of see that peak that took place in 2021, 2022 of litigation, and then we see a decrease that is beginning, and we're now at a point where we still have a ton of litigation, but we are at a place where it's pre-crisis is what I would call it, and hopefully continuing its decline. And then we have what we're seeing in the rate section. The approved average personal residential approved rates, excluding Citizens, which can distort the numbers. If you include it, we see kind of that peak and valley, but a general downward trend. In December of 2022, the average rate increase approved rate was, I think, plus 21%. This month, or last month, in March of 2025, the average rate increase request was plus 2.82%. And then similarly, while we addressed property and focused heavily in the property space, one area that we looked at, one area that was also impacted was bad faith reform that was having a very negative impact on the price consumers paid for insurance in the auto space. And so we see a corresponding decrease within the average rate request that's taken place post-reform versus pre-reform, and you see that January 2023, the average was 14.47 requested rate increase, and last month the average rate request was a decrease of 0.52%. We see that at the moment. We see that trend continuing, although some of those global issues that exceed the ability of a state insurance regulator may have adverse impacts on rates. This is just a noteworthy additional statistic. One of the things that makes it sometimes difficult to capture the true cost of litigation in the insurance space is that while defense containment costs are included in the rate automatically in a specific category, On the opposing side, plaintiff's fees are not always captured in the same way. It's more of a general category, but here we see the defense containment costs for defending against litigation has reduced dramatically in this space. And once again, all litigation costs wind up being passed on to the consumer through the rate-making process. So anytime we see a reduction, we're ultimately able to reduce the rate in the experience, and that is done in an appropriate actuarially sound way. So as time goes on and the overall impact of litigation will decrease in what consumers are paying as a whole and continue to drive prices down. And that concludes my presentation, but I'm happy to answer any questions if there's time.
Thank you so much, Commissioner. I really appreciate you being here and helping us out. I failed to introduce you properly and explain what you were here to talk about, but I think that's pretty evident now. All of us who are insurance curious legislators reference Florida a whole lot because it's an interesting place, and we appreciate the hard work that you're doing. Are there any members of the committee that have any questions for the commissioner? Senator Gannon, please.
It's a self-interested question because I'm very into Naples, particularly. You had a four-legged approach: your inflation, litigation, storms, and reinsurance. With the property values plummeting, is that helping out hugely, or is it just a coastal phenomena that I'm aware of?
Property value in itself would not necessarily dictate what you're paying on the total insured value of a property. So they can generally correlate with each other, but the total insured value of a home is not necessarily just your Zillow estimate, for example. It is going to be, or what the market will buy for it. It is truly the cost to replace that home, or whatever the coverage is you have on that home. It's the cost that it would take to put that consumer back in the same shoes they would have been.
Thank you.
Thank you, Senator. Do we have any other questions? Oh, sir. Cannot see your name tag. I apologize. Go for it, Rick.
Oh, wrong side. In Kentucky, we got a lot of business from Florida when you did PIP reform. And the business we got is not good. And we are wanting to do away with PIP in Kentucky if I can get enough of my Kentucky buddies to help me. We're getting your lawyers and your chiropractors to come to Kentucky. What did you do specifically? And I'm an insurance man too, so obviously I've lived through some of this. What'd you do? What did you did? And that may be prior to you, but yeah. I'm sure you've heard about it.
So just to be clear, the question is, what did we do about PIP?
How did you get rid of PIP in the way that we can get rid of PIP as a state law in Kentucky?
So we still have PIP in our space.
But it's reformed. It
is reformed. It's a regularly contentious issue among the legislature, with often different elements of the trial bar and various actors within that space. Part of that debate, there's some elements of the trial bar that want it repealed. Some elements are comfortable in the space. What we did do, I think, is I believe it was Senate Bill 19 in 2012 that enacted what we call cost containment measures around PIP. That really set a standard of what the biggest change. I think there were 19 reforms, but the biggest one was probably appending the cost of the service provided to Medicaid as part of the Medicaid fee schedule, to create some containment measures around that. PIP is an interesting system in Florida space. The way it's operating essentially is you've got that it's unfortunately, it's a space where there is a great deal of waste, fraud, and abuse that takes place in that PIP structure, but it is containing that cost at $10,000, so a known quantity that can be actuarially indicated over time as to what the cost is going to be. And so vigorous debate takes place about getting rid of PIP every year. The challenge is if we were to do that, it would be, and what I've advocated for at the state level, is if you do remove that cost containment measure, that $10,000, do all the action you want, but it's going to be this much. How do you then prevent it from moving into the BI space, if you will, without those cost containment measures? So very tricky and delicate balance that we're trying to strike there with the affordability of insurance for those who can generally afford insurance the least, but then also ensuring that consumers have adequate coverage on the road. And it's a tricky, difficult space for us to be in. I'll also just apologize for some of our actions moving up to your great state.
Yeah. One more thought, Mr. Chair, if I could. Next time y'all do some reform, wait till we do ours so that we won't get that.
I'll ask the legislature. They don't always listen to me, but I'll ask.
That's interesting. My legislature rarely listens to me, too. Well, thank you so much. Do we have any other questions from legislators, from the commissioner? Sure, please go ahead.
Thank you. Representative Alex Finkelman from Rhode Island. Do you think there's any correlation in both the underwriting profit and the depop of the citizens from people just not buying wind coverage?
So in that case, you'd say they don't have a mortgage and they're choosing not to. We do see anecdotal information that indicates that there is some of that. However, when we look at the marketplace as a whole, and certainly Florida continues to grow, but we've seen even during the crisis years, we saw citizens grow, but at the same time, overall, we saw the number of policies in force in the state of Florida continue to grow as well. So we don't believe it is a systemic challenge that exists, but there are certainly people. I know a neighbor to my parents down in Southwest Florida. They decided to go without cover. They didn't have a mortgage. They were retired, and their house was a tragic story where their house received significant damage. There's definitely stories like that out there. We do hear about it, but we don't see it as a systemic challenge at this point. But it's certainly possible. Yeah.
Thank you for engaging with the commissioner. Any other questions? Okay. Well, Commissioner Jaworski, I really appreciate you being here. And full disclosure, Will provided me a phonetic pronunciation of your name.
Thank you, Will.
But I was going to tell you that I stand in solidarity with you. It's not that Forrest is hard to pronounce, but it's hard to spell. I have 2 R's. And I was so proud that Starbucks spelled it right, and I then realized while I was sitting here thinking about that I've got a name tag on, and that's why they did it. So you just got to peek behind the curtain sometimes. Commissioner, thank you so much for being here. We really appreciate your insights, and of course, Florida will continue to be an interesting case study for legislators who are engaged in the insurance process. So thanks for your work.
Case study is so kind, and thank you for allowing me to present.
Thank you, Commissioner. All right. The next person we've got on the agenda is Elizabeth Blosser from the American Land Title Association, and she's going to provide some insights to the latest issues in title insurance marketplace. I know this is a big ticket item everybody's been waiting for. Elizabeth, the floor is yours.
Thank you so much, Chairman Bennett, and thank you to the members of the committee for this opportunity to talk about the issue of deed fraud. All right. So what is deed fraud? It's actually a pretty broad term that refers to a variety of types of crimes, but the commonality is that you have a perpetrator who is seeking financial gain through some sort of crime that involves real estate. Generally, that includes recording false, fraudulent, or forged documents in local land records. I will say, with people having record amounts of equity in their homes, real estate has become a high-value target for criminals, and so we are seeing a significant uptick in deed fraud over the course of the last couple of years. One instance that you probably all have heard about or read about was the attempt to steal Graceland that occurred last year. And while that was unsuccessful, it really did highlight these types of crimes and the fact that they can happen to anyone. It doesn't matter if it's Graceland, the house down the street, or the place you call home, there is a risk. The type of fraud we are seeing most commonly in the marketplace over the last about 18 months is what we call seller impersonation fraud. And this is where a criminal impersonates a legitimate property owner and attempts to sell the property that they do not own and abscond with the cash. So I do want to highlight that these criminals, we call this fraud, but these are really sophisticated criminals that are operating. They tend to know what types of property to target Generally, they go after non-owner occupied properties, so vacant lots, rental properties, vacation homes, so that, you know, nobody notices that the place is up for sale, and they generally list below market value and are looking for a really quick sale. We did a survey of title insurance professionals this month last year, and we found at that time that in 2023, 28% of title companies had experienced at least one attempt at seller impersonation fraud. And in this month, April of last year, just in that month alone, 19% of title companies had seen at least one attempt at seller impersonation fraud. And if you look at those numbers, over half of those had seen multiple attempts. So, you know, certainly this is a trend that is growing. Fortunately, title companies are catching a lot of this fraud before closing, but towards the end of last year, we heard via a bulletin from the Secret Service that the seller impersonation fraud scheme had changed to include fake title companies. So the criminals were like, oh, let's all use this title company, which is not a legitimate title company. And that is certainly very, very bad news for consumers, because if there's not a legitimate title company involved, then there is no title insurance coverage. For reference, we have seen fraud claims increase. They have more than doubled just over the course of the last 2 years. They tend to be pretty expensive claims, and this is something where if a consumer hasn't been working with a legitimate title company, that's very concerning. The average cost for a fraud or forgery claim is about $143,000. So we have been working with law enforcement on this issue. We encourage our members to report any sort of real estate related crimes to the FBI via IC3, to state attorneys general, and of course local law enforcement. I didn't get a chance to update this slide, but the FBI just a couple of days ago released their 2024 numbers, which showed actually an increase in real estate related crimes. But you can see for the 5-year period ending in 2023, there was $1.3 billion lost in real estate related crimes. And when I talk to the FBI, they say these numbers are low. Certainly there is still a stigma around reporting these types of crimes. And so FBI agents have told me that they think that these numbers could be as low as a 10% representative sample of what's actually happening out in the marketplace. I do want to recognize the good work of a lot of state attorneys general on this issue. General Mays has a staff that's dedicated to this, has run some sting operations with title companies and been successful in really pushing back. Certainly in states like Arizona, where you have a lot of vacation properties and things like that, you see more of this type of crime occurring. So who are the victims when you think about this? Really, there are two victims of seller impersonation fraud. The first is the unsuspecting buyer, and the second would be the legitimate property owner. So how does title insurance come into play? So for the unsuspecting buyer, if they have any sort of owner's title insurance policy, they will be covered because there was fraud or forgery within the closing process. And as I've discussed with this committee in the past and had the opportunity to talk about, title insurance is kind of a unique line of P&C in that it covers things that occurred in the past, things that happened prior to closing or at closing. But about 15 years ago, the industry did put out the homeowner's policy, which is an enhanced policy compared to the traditional owner's policy. And one of the unique features of that policy is that it does cover forgery that occurs in the future. So if a homeowner has chosen that policy and they are a victim of seller impersonation fraud as the legitimate property owner, then they will have coverage, which includes coverage of their legal costs, which is going to be really the most expensive thing for the legitimate property owner. One of the things that's super important is just making sure consumers are aware of this. It's like every other type of fraud that people are trying to do a lot of education around. I do want to commend TDI for putting out this consumer alert on seller impersonation fraud. I think replicating this to consumers anywhere is incredibly beneficial. The American Land Title Association has had a national work group going for the last year and a half to help come up with legislative solutions to address deed fraud. That includes other trade associations within the real estate space, the notary associations, county recorders, and consumer groups like AARP. One of the pieces of suggested legislative text that we've put forward that has been well received is one that requires counties to let property owners know when a document pertaining to their property has been recorded in the land records. Legislation mandating that all counties provide that service has passed in Utah, Florida, and Arizona. I will say this is not an expensive thing generally for counties to do. This is a feature that typically is included with land record management systems. So in many counties, it's a case of just turning it on. So even in states where this has not been mandated for every county, many counties offer this for free, and we always encourage every consumer to make sure that they have registered for these free notifications through their county recorder's office. So given that we are at NCOIL, I did want to talk a little bit about what might be some legislative solutions that a state insurance committee might look at. These are some thoughts that I prepared for this meeting. They're not legislative solutions that we've discussed elsewhere, but we're certainly happy to talk with NCOIL or any legislators or regulators further about them. One idea might be a requirement for notification of the ALTA homeowners policy. Where the homeowners policy is available, it's usually chosen by about 42% of consumers. It's usually several $100 more than a traditional owner's policy, which can be a savings for consumers over other products that purport to protect your title and can cost, hundreds of dollars per year versus a few $100s as a one-time fee. So that sort of notification might be helpful for consumers. Additionally, you'll note that the homeowner's policy is not available everywhere around the country. My understanding is at the time the homeowner's policy came out, there were questions in several states about how it would comply with monoline issues. So that might be another thing where legislators could work with regulators, to figure out if there's maybe an exception that can be made for things like forgery coverage. And another idea would be creating a task force in conjunction with the Department of Insurance and really looking at what can help locally to address this issue based on what's happening in your individual marketplaces. I will flag that this has been a difficult topic to address because the criminal activity changes pretty rapidly. Anytime you sort of put something in place, the criminals adjust. And again, I would emphasize, these are very sophisticated criminal organizations that are, siphoning, billions of dollars away from the American real estate market. So, it doesn't make sense to upend, established real estate law to deal with the crime du jour, but, there are lots of things that I think can be done to be helpful, and certainly we want to be a resource for that and help in any way possible. So with that, I'm happy to take any questions anyone might have.
Thank you, Elizabeth. That was pretty fascinating. I'm still reeling about the Graceland thing. That feels a little too brazen. If I were a criminal like that, I would probably just try to go a little bit lower.
It is incredibly brazen.
At some point, you're going to get caught in that situation. We only have time for a couple of questions on this, but I hope that you're willing to stick around because I'm sure many of us have questions. I know that in Oklahoma we've taken up legislation related to this. One question that I have is you talked about registering for notices. Do you see a world in which that is automatic for homeowners? I mean, it's like an opt-out as opposed to an opt-in? I mean, because this seems like to be a pretty pervasive issue, and it feels unfair, in my view, that it would be on the homeowner to sort of go out of their way to get that. I mean, what do you think about that?
It's a good question, and one we've discussed. I sit on the board of directors for the Property Records Industry Association, which is an association of county recorders, land record management systems, and others that are associated with the land record system. And, you know, we've tried to figure out how you can do that in a cost-effective way, how counties can, you know, have days where they sign people up. Generally, in order to keep these low cost, you get notifications via text or email. But there has been a push to say maybe counties need to mail out to the most recent tax record address on file every time, and it needs to be mandatory for every transaction, not just for people who have signed up for the system. So it's really looking at the cost for that.
Thank you so much for that. Representative Mayfield?
Thank you, Mr. Chairman. Elizabeth, so I did have a bill in Indiana this year to address title deed fraud, and I'm almost glad that it didn't get the hearing because now it is developed in a way that I can really hone in on some other issues that have, because it changes so quickly. So right now we have the notification that something has happened, someone has presented a document. Do you have thoughts about the possibility of that two-factor authentication or notifying them before, okay, someone is presenting a document, I need your approval before we move forward. Do you have some thoughts on that approach to prevent it rather than just notify somebody that this has been done and if it wasn't you, you need to act?
Yeah, so there's really two things you have to think about. That is sort of how do you quickly address it once it's happened, and then sort of the prevention side. So one of the things that we've worked with the National Notary Association on is legislation that would make it explicit in state law that notaries can ask for multi-factor authentication so that you're getting it at that point. So especially for in-person notarizations where you're maybe just looking at an ID and it's hard to tell a fake. There's really great fakes out there. So I think that's good. I think any sort of ID proofing measures can be helpful. The question really is how do you make sure that you're not holding up the process where documents are getting recorded in a timely fashion. But there are a couple of pilot programs. There's been one in a county in Florida kind of looking at how you do that, and some other counties around the country about doing identity verification. I like the idea of trusted submitters. So you have to be like a licensed professional in the state to potentially, you know, submit. Otherwise, you need to be showing ID and going through some sort of identification process. So lots to think about in this space. And again, I go back to it's difficult because you don't want to upend established real estate law, but you know certainly things need to be done to, you know, combat this criminal activity.
Thank you so much for the answer, and thank you, Representative Mayfield, for the question. We do have to move on, but if you stick around, I would love to see any member who has a question reach out to you. So thanks, Elizabeth. Appreciate your participation. As fascinating and as engaging as that is, so is aerial imaging, and that's what we are moving to now. This is the continued discussion. We're not going to have a vote today on the insurers model act regarding insurers' use of aerial images. I want to turn things over to the sponsors of the model, and that's Representative David LaBeouf of Massachusetts and Brian Lampton of Ohio. I think that Representative LaBeouf, you can
All right,
go
great.
first.
Thank you, Mr. Chairman. So first of all, I just want to point out to everyone that the model can be found on page 87 in your binders or on the website app. And so first, I want to thank everyone that's been engaged in this process and the discussion since the last meeting. Representative and Lanton and I have taken some feedback, and we've worked to incorporate these suggestions in our model. And I just want to make it clear that we've been consistent this entire time on making sure that we're not prohibiting the practice of using aerial imagery. We just want to make sure that it is done in a way that both protects the consumers and also provides a good standard for the industry. Quick notes on the changes that have been made. We did remove the requirement to disclose the specific risk scoring system criteria. We recognize that there are some challenges and didn't want to cross that line about disclosing intellectual property information. And then also when it comes to the non-renewals, we did recognize that we don't want to compel insurance companies to be mandated to renew policies, recognizing the market thing, but if so, we did say if they cure the defect, that's where the process to renew is, but if they do want to non-renew for any other matters unrelated to the defects or conditions that have been cured, that's where that amendment came in. And do also want to point out that recently, because of a lot of local news, things, and I'm sure many of you have had constituent cases around this, that there have been many states that have opted to do bulletins from their insurance commissions relative to this. That's what's actually happened previously in my state of Massachusetts, and it relied predominantly on case law, and recognizing there always has to be a balance between legislation and regulatory innovation of the agencies. But because this problem is continuing to evolve and it has come to the level that we're getting these matters, I feel very strongly that we do need to have some legislative guardrails along this, and this is why I put the model forth. Thank you.
Thank you, Representative. Representative Lampton.
Thank you, Mr. Chairman. I want to be brief as I can. I agree with Representative LaBeouf and is glad that NCOIL is taking this on. I also like to point out I've submitted an amendment there on page 90. It's an amendment that my insurance industry used on a bill that I'm carrying in the Ohio House that having to do with more with the use of drones and trespassing. So basically, this amendment would have notification requirements for insurers, companies that are utilizing drones, and basically allow them to utilize the drones for whether it's underwriting, re-underwriting claims, what have you, that they've established permission of the property owner. And you know, a lot of times, especially in the claims process, I've had some discussions with industry folks about the use of drones, and it speeds up the claims process by, in some cases, hours and in others, days. The amendment isn't specifically related to the original model's intent, but I think it is somewhat related in that we want the customers, our policyholders, to know that the use of drones is here, and that the industry is asking basically, you know, permission to use them in those examples that I'd mentioned. You know, as technologies continue to change, in the old days when an insurance company wanted to do an inspection, they'd have to drive to the residence, knock on the door, or walk around taking pictures. Well, now they can, I guess, sit on the street and launch their drone and fly around, accomplishing the same thing, but saving quite a bit of time. So that's essentially the purpose of the amendment, is to obtain permission from those policyholders for the use of the drones. Thank you again, Mr. Chairman.
Thank you, and thank you both for your work on this. Call me old-fashioned. I like the awkward feeling of walking around my house with the insurance auditor and arguing with him about whether or not a plant is too close to the house. Anyway, that hosta belongs there. I think we're gonna hear from our panelists, and then we will open this up to questions. First, we're going to hear from, I consider folks that represent industry also have constituencies, and Amy Bach, we are all your constituents because you represent United policyholders. We will hear from you first.
Thank you so much. And I really do appreciate the opportunity to visit with y'all today. And I actually did have an opportunity to visit with Representative LaBeouf early on. And I think all of you, no matter where you, whatever your district is, wherever you are, the property and casualty insurance market is not the way it had been in the past, and a lot of your constituents are probably getting non-renewed. Some of you may have gotten non-renewed yourselves. So you're all aware that we are in the process of trying to find some solutions to the new normal, which is that insurers are now using technology that had not been available to them in the past, including aerial images, to decide who they're going to take and who they're going to put in the discard pile. So this concept is really an effort to try to, as was previously stated, establish some guardrails so that we're not trying to say insurers cannot use this technology. Clearly, we want claims to get processed faster, and if that's helping, great. We don't want people's privacy to be violated, but clearly Google Earth has been surveying our homes from the air for many, many years, and I think the federal privacy laws, as I understand it, do prevent the images from having an identifiable human, and the technology already accounts for that by blurring. So I just want to point out, I really do appreciate being here. My organization is 3.5 decades old. Some of you may not have heard of us. We've been very active at the NEIC, and I want to thank Will Malofchik and Tom, his predecessor, for really bringing us into the fold here, because a lot of important work is getting done here that we appreciate the opportunity to contribute to. So that's me, and I have been an insurance consumer advocate since I got out of college in the 80s. So this issue has been very hot in the media. I know you all have been feeling it. This was an article that ran in Bloomberg last week about more and more states looking at legislation. The one in the middle on the top, the other ones are from last year when the issue really broke in the media. But this is still obviously something very important. We support the model. You've taken some I think Rep. LaBeouf has taken some amendments to address industry concerns that in a perfect world we would have liked to keep the specific underwriting reference in there, because the whole idea of this proposal, in my opinion, and I'm going to wrap up in a minute because I know time is of the essence, really what we want to do is try to give the homeowner the information that will help them, right? So the model as it's drafted, even if you took out the specifics of the underwriting rules that they ran afoul of, you still want the property owner to know what the problem is from the insurance company's perspective. What's wrong with my property? Give them a chance to fix it, right? So we want to make sure the photos are reasonably current. You have that in the model. You want to, it accomplishes these things, right? Gives them the benefit of that information that the insurance company is gathering by their ability to use this technology. What we like about the model, it gives them a chance to make those improvements that will make it less likely their property will be damaged in a severe weather event. It appropriately rewards the property owner who takes action to reduce risk. That's number 4. That's the key, right? Provides an essential incentive for people to invest time and money into risk reduction property improvements, which we know is challenging. The amendment ensures that flexibility in number 4 to non-renew for a business reason unrelated to what the aerial images reveal. So in closing, I just want to say, and this is just for y'all, you can go to our website. We do handouts. We do them in collaboration with DOIs. We have one with Alabama, where we are in the business of trying to help people get through this insurance crisis, this availability and affordability crisis, by engaging in risk reduction. We know it's one of the only strategies we have to try to help people stay insured. So in closing, in a perfect world, I would have said, don't put that change into number 4, because we really do need the consumer to have that carrot. If I do these things, if I fix what doesn't seem to be broke, but you say it is broke, then I will get renewed. That's really what people need. But I would encourage you to keep this model moving. I would really hope there wouldn't be further amendments. I think it's very fair as you've got it now, and it balances consumer and industry interests very well. And I'll be happy to answer any questions.
Thanks so much, Amy, and we'll be holding questions until we hear from everybody. So we're going to hear from David Buono.
Fantastic.
Nailed it? Oh, by the way, Amy, Will is really appreciative that you also got his last name right. So just everybody's, we're all doing a lot for each other today, and we all deserve a pat on the back. Anyway, David, please go ahead.
Good morning, everybody. On behalf of Commissioner Mike Humphreys, thank you for inviting the Pennsylvania Insurance Department here to speak today. So why am I here? We are actually one of those states that put out a bulletin notice in relation to aerial imagery and homeowners insurance. So some may wonder what sparked us to feel the need to do a bulletin notice, and we were receiving complaints from Pennsylvanians, folks that were frustrated saying that my roof doesn't have any damage, or my company didn't give me the opportunity to fix it. You know, and as a regulator, we had to try to figure out what is the best step forward in relation to the situation. So one option that I have is market conduct, but that really felt like taking a sledgehammer to a gnat. And then we started thinking about, you know, have we really talked to folks about the expectations that the regulator has? So that is where we decided to do the bulletin notice. You know, we wanted to make sure to advise insurers of the department's concerns in relation to the use of the technology when you evaluate the roof. And we wanted to make sure that we clarified the importance of providing the residents in the Commonwealth the opportunity to challenge aerial results or correctly confirm roof deficiencies before they are canceled or non-renewed. And those were really the focus of the complaints that we received. What I want to do right now is show you a couple of pictures that kind of made us think through what was happening. So this home is a home that received a non-renewal cancellation notice for the roof needing to be replaced. From the pictures, you know, and I am not, by the way, I am not saying anything is wrong with how the pictures were taken or what the pictures are taken, but, you know, when you're looking at that, you don't necessarily know what you're seeing. This home right here was another home that also had received a non-renewal cancellation notice. Once again, it's hard to tell if that's a tree shadow, if it's a power line, what it is. So we felt that one important thing to follow when non-renewing or canceling a policy is to ensure that the insurance company provides a specific reason as to why they are canceling, because this is kind of hard to judge. The focus of our bulletin notice, and first and foremost, kind of like what Amy said, is we do not seek to restrict the use of aerial imagery. We can absolutely see the benefit of the technology, and the last thing that we want to do is slow down technology. But we want to make sure that folks are thinking about the ripples that can occur as you're rolling out the new technology. We also wanted to make sure that in the absence of unequivocal material damage shown, it would be prudent for the insurer to conduct a physical inspection to validate the damage. You know, I spoke to a carrier at one point that said, hey, we'll send a letter and have the consumer send us pictures. If you send that to my 73-year-old dad, he will absolutely climb on the roof and take pictures. So we wanted to kind of say, hey, look, you know, we get what you're saying there, and we understand that you want to maybe put that in the hands of the consumer, but you know, if you want to use the technology, let's make sure that you may own the physical review a little bit closer. We also wanted to make sure that the insurers are providing the notice of cancellation or refusal. We did have some where folks just did not receive it. It was the cancellation is what they got. Now, that could have been just a situation where a company was confused in relation to the regulations of the Commonwealth, or it could have been how it was being handled across the country. But we wanted to make sure to set that stage. And we wanted to make sure that the insurers are providing the consumers the opportunity to identify and you know, stress the importance that maybe the roof didn't need to be replaced. As a matter of fact, one of the sets of pictures that I had shown, they actually hired a roofer at their own cost to go up on the roof to be told that there was nothing wrong with their roof. And they had received that non-renewal cancellation notice. And you know, that's an expense for a consumer that I don't know if that should necessarily fall on their shoulders. So what has the bulletin done for us? The first thing that we did do was we ground set what we would be looking at, you know, because how fair is it for us to come down on someone without letting them know how we're reviewing it, what we're reviewing, and giving them I guess, the rules that we would be looking by. We reminded the insurers of the obligations under the Unfair Claims Practices Act. We didn't want folks being non-renewed that shouldn't be. But we also want to make sure to strike the balance that if there are some roofs that need to be repaired or replaced, that the consumer needs to act accordingly and get that done. Now, since the bulletin announcement, we've seen a significant decrease in complaints. We still need more time to better understand the impact because, you know, we kind of released that in the summer. As you get into that fall and winter, a lot of times insurance companies are reasonable with somebody go, we don't expect you to go up on the roof right now when it's January and snowing to get that fixed. So we're still trying to learn and understand. We try to have an open door in relation to any communication with new technology because we want to make sure that it's successful. We want to make sure that the companies are put in a position to do well, and we don't want Pennsylvanians negatively impacted because of decisions that were perhaps premature or lacking the information to support the decision to non-renew or cancel. So with that, at the end, I'd be happy to answer any questions that you may have.
Thank you so much, David. Next, we are going to hear from Jenna Denault, and I don't know if I got that one right, but it sounds a lot like the last name of the head coach for the extraordinarily talented Oklahoma City Thunder. So you are my favorite presenter at this point. Please go ahead.
Thank you for the comparison. I need to study up on basketball after this meeting. Hi, everyone. I'm Jenna Denault. Thank you so much for the opportunity to come here and comment. I'm here on behalf of NearMap. I am the piece of this, the company that actually collects the aerial imagery, processes it, and uses AI to provide information to insurance companies that's then used in the context of for example, the Model Act on non-renewal. So I'm going to be focused on that Model Act here today. So NearMap is a aerial technology company. We have customers that include insurance companies. A total of 200 insurance companies are our customers. We surveyed the U.S. collecting aerial imagery. Our surveys collect images for 86.7% of the U.S. population. We design camera systems that are then put on manned aircraft, so someone is actually flying the plane, and they zigzag their way across the United States collecting aerial imagery. Then NearMap itself processes that imagery. They've developed multiple AI products, so sometimes depending on the customer's needs, that aerial imagery is fed into an AI system that then provides information like a new pool, a new trampoline, tree overhang, roof conditions that might have deteriorated, and insurance companies can make decisions based on that information. So NearMap basically controls every step in the process from image collection to the final outputs that are provided to the insurance companies. For our discussion here today, there are 2 points that I'd like to raise with all of you. They have to do with the resolution of the aerial images that would be provided to the insured as part of a non-renewal notice, and then also the recency of the aerial images so that they're actually useful to the insured in understanding why there is a non-renewal notice. Here I have proposed a potential amendment to the Model Act for discussion purposes, and what this would do is it would require basically a image that isn't blurry, where the insured could actually see what's going on with the roof and better understand what the issue is so that they can ideally address it and continue being covered under whatever policy they have. So 7.5 centimeters GSD. GSD stands for ground sample distance. This would mean that within an image, for every pixel it covers 7.5 centimeters. So this is detailed enough where you can see roof deterioration, you can see tree overhang, you don't have the shadow issues, or you can tell, to Commissioner Buno's point, you can see whether something's a shadow or whether it's an actual physical tree. So it gives you that level of detail, but it's not giving you the level of detail where you have personal identifiable information and you can say, oh, there's my neighbor in that picture, or there's my dog. You wouldn't be able to make those distinctions. So here I have a comparison of 7.5 centimeter resolution compared to 15 to 20 centimeter resolution. And you can see there is a difference. If you're sending a non-renewal notice to an insured and you're giving them a blurry picture, it's not going to bring the peace of mind that I think that the Model Act is intended to give. And it's not going to necessarily give them clarity on why their roof appears to be deteriorated in the aerial image and was detected by AI as having deteriorated to a point where a non-renewal notice is appropriate. And these images are collected by an airplane that's flying at around 13,000 or 16,000 feet. So there isn't the invasive aspect of this where you have a drone circling your home or you have someone having to climb up on your roof to inspect the roof. So there's efficiency in terms of collecting the information by the insurance company, and there's a less invasive process for the insured. The second point that I'd like to raise is the 12-month recency of the aerial images. There's been some discussion as to whether that perhaps should be expanded to 24 months. We believe that 12 months is the appropriate period because a lot can change with a roof in 2 years because of wear and tear, because of natural events. So resolution, we would propose the amendment to the Model Act with respect to resolution so that the images are more informative for the insured person receiving the notice. And then the recency point, we agree with the Model Act as it is. That is the end of my presentation.
Thank you so much, Gina. I personally prefer photos of me with lower resolution because I look more handsome. We will hear next from Paul Martin with the National Association of Mutual Insurance Companies, NAMIC.
Chairman, members, Paul Martin, thank you for the opportunity to continue the conversation. So as a general rule, I think the NAMIC membership would say that the bulletin route is the preferred route. There are about 5 or 6 states already who've issued bulletins clarifying on how best to use aerial imaging. It seems to be working for regulators and consumers when it's done that way. It's working for the industry. Having said that, the amended version of this draft bill is a marked improvement. We are working on some suggested amendments of our own to address some of which are just technical changes. Others deal with not necessarily prohibiting the use or prohibiting giving the pictures to the consumer, but rather refining how you create that process by which the policyholder can get the pictures. Also, it's not simply enough to cure the defect, but the defects need to be cured correctly so that it's not Paul on his roof doing the repair and saying repair is done. It is someone who actually knows what they are doing. There is I assure you, just ask my wife, there is a big difference between my handyman skills and someone who is a true professional. And then so we're not opposed to the bill per se. There are some things that need to be changed. They are technical in nature, but I think we're probably getting closer to where we need to be than we were at the onset. And we also are supportive of Representative Lampton's amendment. I wanted to make sure we got that on the record as well. I'm happy to answer any questions at the end.
Thank you so much. Really appreciate your comments. Next, we are going to hear from Hillary Segura of the American Property Casualty Insurance Association. Hillary, go ahead.
Thank you, Mr. Chairman. I appreciate the opportunity today to make some additional comments on the model. I know I've spoken on it in the past, and I would, for purposes of brevity, I would echo some of the comments that my colleague Paul has made regarding the use of the bulletins, and that does seem to have been working well. The amended version of this model, that it has been positive developments, but I do agree that there needs to be some further clarifications within the bill. Aerial imagery is simply a different medium for obtaining underwriting information. It allows insurance companies to evaluate properties in a safer and more efficient way. It's not really any different information, it's just a new way that we are getting the information. And there are existing laws and regulations in every state that provide consumer protections. We do have some concerns that some of the language that remains in this model remains overly burdensome for implementation purposes. And we want to make sure that it's incredibly important to allow insurers to be able to make appropriate business decisions within their underwriting guidelines. I won't go into a list of some of the granular suggestions we do have to make and provide some further clarifications, and I'll provide that to the INCOIL members. But I will echo the concerns regarding making sure that we clarify the cure, that the cure corrections are done correctly. I think particularly making sure right now the amended language reads that you have to require an offer of a renewal policy after it's cured, and we definitely need to make sure that if something is cured, curing can be a matter of opinion, and the proof submitted may not meet requirements or expectations on both parties. So the process of the curing itself needs to be clarified to set standards, so there's expectations that both the insurer and the insured understand going into the process. So I'm happy to provide some additional feedback and specifics on some potential changes down the road.
Thank you so much, Hillary. I think lastly, we want to hear from Wes Bissett. And you know what, Wes? Just speaking of names, this is like the 1000th time I've introduced you, and it is Bissett, right? I used to put the emphasis on the wrong syllable. Okay, thank you. Wes, go ahead. We're on a first name basis. So.
Thank you. I'm not sure this is working. Perhaps user error. Thank you. Mr. Chairman, thank you very much. From the Big Eyes perspective, we strongly support the model. We appreciate Representative LaBeouf and Representative Lampton bringing it to the table. I very much agree with and associate myself with the comments that Amy made earlier. This is a great technology, but one of the things that we are finding in the agent community is we are hearing increasingly, and more than you might expect, from agents who are finding that the images that are used are not always perfect, and they're oftentimes faulty conclusions that result from that. So we think this is a very important model. There is a gap in regulation right now. I know there's been some suggestion that state law imposes requirements of this nature already. That's not the case. We need a statutory framework, especially since states are beginning to consider this issue and take it up. Having interstate consistency would be important. So we think, I won't belabor the point, you have a busy agenda the rest of the morning, but we strongly support this. I don't know what the amendments are that the insurer community might be contemplating, but we would urge you not to unduly weaken this model. It's pretty good as is, and we'd encourage you to adopt it as soon as possible so that states can perhaps take it up and adopt it in early 26. Thank you, Mr. Chairman, and good luck to your team the rest of the way.
Thank you so much. Really appreciate that. I know you meant it, Wes. I don't know who your team is, but we'll play them next, maybe. I really appreciate everybody's comments. This is, obviously we know as government folks that policy usually trails behind technology, and this is certainly one of those areas where we want to make sure we get it right, so I appreciate everybody's thoughtful contributions to this. Before we open it up to, well, yeah, we have one question, right, from Representative Oliverson.
Yeah, not really a question, but just more of a comment. It's just that, I mean, to me, as I've listened to all of this, I just think that the main issue here is privacy and consent. And I think just like a life insurance policy, if somebody was going to access your protected health information in order to be able to determine if they were going to cover you or if they were going to continue your policy or what they were going to charge you, you can consent to that or not consent to that, but you should know up front that, you know, we may fly a drone over your house at any time. I just think that's, to me, that's part of way to solve this is to just make sure people are informed and they understand, and they have to sign a document that says, I know that part of this policy is that they may fly over my house at any time or get aerial images, and I may not even be aware of it. I just think if people know that that's part of the deal, they can at that point say, well, I don't want to work with this insurance company, or no, I'm fine with that. So, my 2 cents.
Appreciate those comments, Representative. We'll get you in the queue, and then Representative Tice. Senator Tice, I apologize for promoting you to representative.
Thank you for the humor you bring to the committee. Thank you, Chairman. I have a couple of comments. One of them is you mentioned the resolution of at least 7.5 centimeters. At least 7.5 does not prohibit you from doing a higher resolution. So while you're saying facial characteristics are not recognizable at that distance, something more absolutely would be. And so I wanted to mention to our committee members that the language that is recommended does not negate that as a possibility, even though it was discussed as such. And then I guess I take umbrage with the commentary of the caution around the cure. My house is built in 1937. My husband used to repair nuclear subs, and he has repaired so much around the house that it drives me nuts. Like, I wish we'd hire somebody. But he can, and he's really, really good at it. And just because he's not a professional at that doesn't mean he doesn't do a really good job. And there are a host of people who purchase everything from Home Depot and keep them afloat that would also take umbrage with that. So I would be also caution us to make sure that the language doesn't prohibit the people who are taking care of their own homes and doing it well from being recognized in this space. Thank you.
Appreciate those comments. For our last question, Representative McFall.
Thank you, Chair. To piggyback off what you were saying, those photos also have their neighbors' houses in it, and they weren't blurred out, their backyards weren't blurred out, and they did not consent to those photos being taken. So I agree with what you're saying. I mean, those houses were not part of the policy, and so I don't know if there's a way that we can also make sure that their privacy is taken into account, because the focus obviously is on the main house, but everybody else's property was included in those photos as well. Thank you.
That's a good point. All right, before we move on, I think that we'll lead Representative LaBeouf and Representative Lampton, if either of you have closing comments, you can go ahead, Representative LaBeouf.
Thank you, Mr. Chairman. So first of all, I really want to thank everyone for this discussion, again, for taking this topic up so many times. Just as we move forward, I just do want to caution on a couple of things. When we look at the bulletin versus legislation, I think all of us have been in situations where there has been a great bureaucrat or great regulator that has done phenomenal work in their agency, and then as soon as they leave, all that work is gone. And so having some type of guardrail is perfect, or is great. I mean, I think my bill's perfect, but anyway. The second thing I want to say is just the over specificity. I think, exactly what Senator Tice referenced is one thing, but also, just to give you a short anecdote, I am currently fighting a budget amendment because there's a statute in Massachusetts that says every Registry of Deeds has to put their documents on microfilm, and there's a national microfilm shortage. So if you're over specific with the technology, as technology advances, the statute, you're going to have to go through things. So allowing the regulators to implement the regulations when it's necessary, but giving the structure so that if the individual changes, that we have something in place. So thank you.
That's helpful. Thank you. Representative Lampton? Nothing? Okay, thank you so much. Really appreciate the discussion on this, and I know that we will continue this conversation. There won't be a vote today, obviously, but I appreciate that everybody's been at the table and contributing. The last thing that we're going to be talking about, and I recognize what time it is, we started this meeting about 10 minutes late, and that's my fault. And I am well aware that it is a law enforcement official that is next at the luncheon, so I don't want to upset him. But we are going to allow ourselves to go about 10 minutes over if we need to for the discussion and potential consideration of the Online Marketplace Guarantees Model Act, or as I've been getting in my emails, the OMG model. We have the potential to vote on this at the end of this conversation. And I know that Representative Lampton, as prime sponsor, has put a lot of work into this since the San Antonio meeting, and the folks have been engaged in getting closer together on this, so I look forward to hearing from everyone before we take potential action. First, I want to hear from Representative Lampton. Please go ahead.
Thank you, Mr. Chairman. You can view a clean version of the model in your binders at page 92 and then again on 97 with the red line version. Both versions also appear in the website and app. We've had a lot of feedback and received a lot of interested party and committee members. The model has been significantly changed. Most notably, it's been limited to being applicable to the rental home marketplace. As I mentioned at the beginning of the discussion, we've always been receptive to making changes to the model to make sure we get things right. As you can see from our latest version, there's been significant changes to ensure that all the concerns have been addressed. In fact, it might be one of the most changed model has undergone in recent NCOIL history. But it's important that we've collaborated and made these changes as discussions have continued. One of the fringe issue coming out of nowhere is that the original model had actually already been enacted into law in Arkansas. So this important public policy is already been passed in that state. I want to especially thank all of the interested parties who have been working with us, and a lot of effort and a lot of Zoom meetings have been going into this, and quite a bit of compromise. I think this model is ready for consideration, and I would encourage the committee to support the model today. Thank you, Mr. Chairman.
Thank you, Representative. And before we move ahead, there is an amendment we need to adopt. So you've been given that. It's this one page here. Do I have a motion to adopt? Oh, we don't have to adopt it yet. You're seeing things happen live. Okay, I've been told that we're going to hear the speakers first, and then we're going to maybe amend this, and then maybe we're going to vote on it. We'll see what happens. Let's keep the remarks as concise as possible. But I do want us to have as much of a discussion as we need to on this. So thank you again, Representative Lampton. I think that first you will hear from Hillary Segura from APCIA, and then Matt Overturf will be next.
Sure. Thank you, Mr. Chairman. Hillary Segura, APCIA. I will agree with Representative Lampton. There has certainly been a lot of back and forth as we have been working on language on this bill, and I appreciate Brad and Byron's efforts as we have worked on the amendment that you do have before you today. What I will say is we have moved the bill to a much, much better place, in our opinion, than from where the bill originally started. The language in the amendment continues to narrow the focus to property damages occurred that occur to the property owner, the co-owner, the leasee, but the owner. It removes the damages and perhaps the guarantee from the renter side, which was something we've been very concerned about all along, about the conflict inherent in that with travel insurance, NAIC, and NCOIL models. We appreciate all of the work that Airbnb has done with us on this to get it to this place. So I would say very appreciative of that. I know we did hear from the regulatory community yesterday that they had some concerns. I don't know whether or not our agreed language that we've kind of slogged through over many, many hours alleviates their concerns, and I think that's up to this body whether or not you all think this is sound public policy.
Thank you so much, Hillary. Next, Matt Overturf.
Thanks, Mr. Chairman. I want to begin, Matt Overturf on behalf of the National Association of Mutual Insurance Companies. Just want to begin by thanking Chairman Bennett and Representative Lampton for your patience as we've worked through this issue over the past several months in many Zoom calls, and appreciate Airbnb and everybody as we've engaged there. The version before us today is an improvement. However, we continue to maintain that the model is not necessary, and I'll give you two primary reasons why. The first being that there's not been a demonstrated market failure that creates a gap in coverage that warrants this model law, and the second is the establishment of a precedent of a model of law allowing to offer products that transfers risk outside of the insurance regulatory framework. To that last point, we would encourage this committee or NCOIL, the body at large, outside of the model law discussion to have future conversations on what we've been calling the insurance, not insurance, gig economy issue in an effort to potentially establish policy principles for issues such as this that are likely to come in the future. Thank you.
Thank you so much, Matt. Next, I think we'll be hearing from Brad Nail with Airbnb. Please go ahead, Brad.
Thanks. Brad Nail with Converge representing Airbnb. I'm here with Byron Wobeater, who's Associate General Counsel for Airbnb, and he'll be available for questions that you might have. Thanks to the sponsors, Representative Lampton and the chairman for working hard on this. And thank you also to our fellow stakeholders here who have engaged and we've worked toward agreeable language, I think. So for those of you who were here either at the summer meeting or at the fall meeting in November, this issue was discussed at length there. And since that November meeting, a couple of things have happened of note. First, as Representative Lampton referred to, the prior version of this model was filed by Senator Boyd, who unfortunately can't be at the meeting today, in Arkansas as a bill. That was the online marketplace, the broader version of this bill. And it passed the Senate there 33-0. It passed the House 97-0 and has been signed by the governor, so it is the law in Arkansas today. So it has been thoroughly vetted by committees and a legislature. The second thing that happened is the stakeholders in the insurance industry had come forward in November and expressed their concerns, mostly around the breadth of the model and a desire to narrow the scope of the model. And so we've engaged in extensive discussions along with the sponsors. And so the version that you would be considering today is substantially narrowed. And there are really three main areas where it has been narrowed. First, it only applies now to the rental home marketplace instead of applying to any online marketplace. Secondly, in the prior iteration of the model, it's important that anyone offering this guarantee be able to demonstrate their ability to have the financial wherewithal to satisfy it. And in the prior iteration of this model, there were three options for them to be able to do so. They could back it with an insurance policy, or they could have a certain amount of cash on hand, or they could have a certain market cap with their company. We've removed two of those, and now it has to be backed by an insurance policy. So there is insurance involved in this now. And then thirdly, the most recent changes that were suggested by APCIA, as Hillary described, were to narrow it to only applying to the owner or the controller of the property instead of the person who's going to be renting it. So we think that this is an important model to provide clarity and consistency in the law and to provide direction for your regulators. We've discussed this for a year now, and we feel that this has been fully vetted and that it is ready to pass. And now that we have the insurer input into the model, we feel like it's well positioned. So we would ask for your favorable consideration. Thank you, Mr. Chairman.
Thank you, Brad. I appreciate that. Last, we want to hear from Byron.
Thank you. Thank you, Chairman. I'm here to answer your questions, and again, as Brad mentioned, we're looking for your favorable consideration.
That was my favorite presentation because it was like 2 sentences. All right. I know that there has been a lot of discussion, so much discussion around this that I find myself surprised when out in the wild I run into someone who does not have a strong opinion on the Airbnb model. I'm sure we will have some questions and comments from legislators. Who has anything that they would like to add or ask? Senator Michelle, we'll start with you.
Thank you, Mr. Chairman. I thank you for the effort you've put as author of this, and I know that this committee has addressed this issue many times in our previous meetings, and as a member of the Property and Casualty Insurance Committee, I've had multiple discussions with the groups, and I want to thank y'all for getting together and all the time and effort you've spent on working out a model that y'all are happy with, and I appreciate your efforts.
Thank you, Senator. Representative Gandolfo? Assemblymember Gandolfo. Apologies.
Good correction, thank you. So I just wanted to hear a little more about the coverage gap that we're addressing here. What exactly is happening for property owners on the marketplace that current insurance policies are not addressing properly?
I think it's fair to say that most homeowners' policies may not provide coverage during short-term rental. What Airbnb does, what they do currently, and that this would recognize, is that if you are the owner or the controller of the property and you would like to list it on Airbnb, well, if the person who rents that from you is contractually obligated to pay you for any damage that occurs to the property. If they fail to satisfy that, if they fail to step up and pay you, Airbnb wants to be positioned to say to you as the owner, we'll pay for that damage, and then we'll decide whether to keep going after the renter to pay that. And that's really the crux of this. There have been a couple of states where the regulators have questioned the arrangement, and that's why there are about half the states where there is an exemption in the statute that we think applies to this. There are about half the states where there's probably some case law, but in almost all the cases, that predates really the economy that we're talking about. And so it would be beneficial to have the clarity in the statute and something that directly addresses the arrangement that we're involved in.
Okay, thank you. And bear with me, Chairman, I just have a couple more quick questions here. And I'm looking at the definition of provider, and it includes any affiliate or representative. What's the reason for that language there?
Yeah, that comes from other language within statutes, and it could be, a subsidiary of that company that actually provides it, but it still has to be the company. And if you go back to rental home marketplace definition B, it still has to be a company that their primary business is not this. Their primary business has to be something else like the rental home marketplace.
Okay, and in terms of regulatory authority, what oversight would a Department of Insurance, or in New York's case, Department of Financial Services, have over this guarantee? Because in the model, it says the guarantee itself is not an insurance product.
Yeah, so if you look at Section 7, it has enforcement provisions, and the way that's drafted is sort of broad right now, but that would be sort of a state-specific, it would be drafted in a state-specific way. That's one. And then Section 8 has the authority, the commissioner has the authority to promulgate regulations that are in line with the model, and we think those pieces are important so that it has the appropriate authority.
And could I just add one? Sure. I think Representative Lampton, for one, has expressed that in his state he believes that this might be better suited under the AG rather than the insurance commissioner, and that's a decision that we think, another decision that would probably be on a state-by-state basis.
All right, I appreciate it. Thank you, Chairman. Thank you.
You're welcome, Assemblyman. Senator Felskowski, go ahead.
Thank you. I guess, as a legislator, and I think of all of us, is when we become elected, we do it to solve issues for our constituents and to really take on and provide solutions. And I come from an area of Wisconsin that's heavily tourism, and I am also an insurance agent. And I have to agree with Namik on this one. I have not had one host come to me and say, you know what, I can't obtain insurance on my Airbnb, whether it's commercially because I have numerous ones, or maybe it's because I have a summer home up north and, I'm going to rent it out part-time to be able to help afford it. The insurance industry has stepped up and done an amazing job to provide coverage for those people. And I'm a little concerned with this model. In fact, I'm greatly concerned with this model because I don't think that it's putting forth a product that is allowing our hosts to replace or to even provide a product. Because if I have a homeowner's policy and I'm renting it out as an Airbnb, you're not replacing that insurance product. If that home burns down while it's renting, you're not going to rebuild that home. You're putting a Band-Aid product out there in the form of not insurance, guarantee, warranty, not a real product. There's no disclosure around what you're charging the host for that. And I actually had a representative try to tell me last night, it's free. We're not charging you. Well, I have some swampland too. There is no free. You're baking these costs in, driving up the cost to the consumer, not being transparent in it, not allowing hosts to opt out. I still have to buy and purchase a comprehensive product to insure that property. Now, I wasn't at the NAIC dialogue yesterday, but there was concerns around claim payment, filing of claims, and actual payment to this. So whom are we passing this model for? Are we passing this model for the renters? Are we solving an issue for them? I don't think so. Are we solving an issue for the hosts? No, because those hosts still have to buy a comprehensive policy to fully insure and cover the home that they are renting. We are passing this for Airbnb and VRBO. It's a cash cow. Let's just be really honest here. And kudos to you. It's a great business model. But let's just be honest in what we're doing. And yes, you may pay out some claims. You may do some good with it. But let's just have an honest conversation about what we're doing.
You're certainly entitled to respond to that if you want to.
Well, there's a lot of ground to cover there. I think the main point, I know Senator Felskowski and I have talked about this, and I understand her perspective on it. Airbnb, despite the assertions to the contrary, does not even charge anyone for this. This is just a component of their overall costs, and we think it's necessary to provide the host, the property owner, with peace of mind that when something does happen, that Airbnb or the other rental marketplace will be there to back them up. That's really what we're seeking here. And what we're in need of is sort of the regulatory certainty to do this, to continue doing this, because it is a benefit. It is a benefit to the hosts and to the guests.
And then I would just add that we feel that the consumer protections already baked into the model are comprehensive, adequate. The regulators will also be able to regulate through regulation as well. And then, as Brad mentioned, this will be backed by an insurance policy. And so that reimbursement insurance policy will be required.
And just one more point, that we have had numerous discussions with insurance departments in states. And while there are a couple of states that have expressed concerns, the vast majority of them, when we have met with them, laid out what we're doing today, have told us that yes, they agree that it's appropriate and that they have no problem with it. So I don't want there to be a perspective that there's concern about this across the board from insurance departments.
Thank you for that. Representative Jordan.
Thank you, Mr. Chairman. I just want to give sort of I wasn't going to comment, but I think it's fair to give a different perspective. I do think that this solves an issue for hosts. As many of you know, I'm from Louisiana, and while I don't represent New Orleans directly, it is, of course, obviously in Louisiana, but I do also represent Baton Rouge. And New Orleans, if you've ever been to New Orleans or if you've been to an LSU football game, you know that there's a lot of partying that goes on. And sometimes with that comes destruction. And so while this isn't an issue that has necessarily come before our insurance committee, I also serve on commerce, and it is an issue that's come before our commerce committee several times. And I will tell you, I've heard from several hosts who have said that during the partying scene, either in Baton Rouge or New Orleans, that destruction has happened to their properties. And a lot of these claims are relatively minor claims, but still they want to be able to recover from that and feel like they can be made whole. So from that perspective, I certainly don't have a problem with the model. From a consumer perspective, if somebody's caused destruction, I think that there should be some restitution. But if they're relatively minor claims, I would hope that Airbnb or Vrbo, whoever it was, wouldn't necessarily go and try to, you know, recapture somebody for taking 10 towels. But short of that, I certainly don't have a problem with this because I do think it solves an issue for the host. And I've heard from those hosts, just to give an alternative, I've heard from those hosts directly, and some of those are my constituents. So thank you.
Appreciate those words, and we are running short on time. At this point, folks, we have talked about this for, I think, 4 in-person meetings and multiple Zooms. It seems to me that at this point, the issues are sort of philosophical differences about what is insurance, which is perhaps the most existential question of our time. And I know that you all have worked together a lot on this here, and you will continue to work together on this at the state level. I think we got a bit of a preview of what those arguments on both sides will look like. But at this point, I would like to entertain a motion, first to adopt the amendments. Do I have a motion to adopt the amendments? So moved. And we got a second and a motion. All in favor? Aye. All opposed? Okay, the ayes eked that one out. I will now entertain a motion to adopt the model as amended. Mr. Chair, I'll move that. So we have 2 enthusiastic movers. Do we have an enthusiastic second? Second. All in favor of adopting the model as amended? Aye. All opposed? I'm going to do one more voice vote, and I want everyone to confidently state their position. All those in favor, please say aye. Aye. All those opposed, please say nay. Nay. All right, folks. I do not feel confident that I heard one side or the other louder, and that was my fault because I encouraged you all to be loud. So we're going to do, I think the easiest thing to do would be, can we do a hand raise vote? Okay. We're going to, if you support the model, please raise your hand until I say to put your hands down. We do have to do a roll call? Okay, never mind. We have to do a roll call because not everyone on this committee is a member. And I do apologize for this, but nothing works up an appetite like a roll call vote. So we'll have a good lunch after this.
Okay, so I know a couple of committee members had left the room, so bear with me here. It's Senator Mark Johnson from Arkansas. Illinois Representative Rita Mayfield. Indiana Representative Peggy Mayfield. Kentucky Senator Jason Howell. Kentucky Representative Mike Meredith. Louisiana Representative Edmund Jordan. Massachusetts Representative David LaBeouf. Michigan Representative Brenda Carter. Michigan Representative Mike McFall. Michigan Senator Lana Tice. Michigan Senator Michael Weber. Clarification? Okay. Minnesota Senator Jeff Howe. Minnesota Senator Paul Utke. Aye. Mississippi Senator Walter Michel. New York Assemblyman Eric DeLon. New York Assemblyman Jared Gandolfo. New York Assemblywoman Pam Hunter. Ohio Representative Brian Lampton. Yes. South Carolina Representative Carl Anderson. Tennessee Representative Dennis Powers. Texas Representative Tom Oliverson. Wisconsin Senator Mary Felskowski. West Virginia Delegate Walter Hall. Mr. Chairman, don't have to vote unless to break a tie. It seems that the ayes have it by 12 to 6.
With 12 to 6, that model passes. Congratulations to the committee for experiencing a very rare roll call vote. I want to say thank you again to everybody who's contributed to this discussion. I know that there are a lot of feelings on both sides about this, and I, for one, don't need to hear about Airbnb for another week or so.
That was fun.
We have one more thing to do, but we have some comments from
Sorry,
Representative Hall.
Mr. Chairman, we haven't seen a model this controversial in a while, that we had to go to a voice vote. So I'm going to make a recommendation, if it would be appropriate, that we revisit this more frequently, just to kind of keep an eye on it and see if it's being adopted and what's happening with it. And I think that would be appropriate. So that would be my motion if it's appropriate.
So the motion is to revisit this more frequently than 5 years. Do you have a specific? We will.
Your discretion, sir.
Okay. Well, this is going to be referred to the executive committee, and I think that we can probably have a conversation there about that. Does that sound good to everybody? Okay. All right. Thank you so much. Do we want to move forward with the here for? Sorry, one moment. Okay, the last thing that we're going to discuss quickly, wildfires. I want to hear Paul Martin of NAMIC, who wants to say some things, and then we will go have lunch.
Thank you, members. I know I'm the only thing standing between you and lunch, so I'll make this really quick. The number one issue we are working right now across the country in state legislatures deals with the issue of utility immunity, particularly with regards to wildfires. There are about 12, I believe now, states that have entertained these bills. Either they're currently pending or have been considered. The bills all have a different variation, but they go something like this. If a utility company has a wildfire mitigation program and they comply with it to some degree or another, they are immune from all damages they create, no matter how much property they destroy or lives they take or pets they kill or livestock that is destroyed in these cases. We're not asking for a model, but we do suggest that at your meeting in the summer that you have a general discussion panel to discuss these issues, because we think we're going to see this in other states in 2026. We just want you to be aware of all the issues. It's not that we're necessarily opposed to creating a articulated standard of care for utility companies. That makes perfect sense to us. But when you start to give immunity, you're starting to see some very unique relationships and unity between insurance companies, trial lawyers, firefighters, lumber companies, ranchers, farmers. We just think this organization needs to be fully aware of what's going on so that you can make informed decisions back in your states. Thank you.
Thank you so much, Paul. I fully agree with you, and I hope that we do have that discussion.
Thank you, Chairman.
Mr. Chair. Mr. Chair.
Yes, sir.
I know we have to go, but my name is Jesse Bjork, I'm a state senator from Alaska. This is a huge issue in Alaska, and I want everyone to be aware, as even my utility pushes for immunity. Immunity doesn't keep the forest and people's communities from burning down. Someone has to be responsible to clear the right-of-way and keep trees from falling on the power lines. Everybody wants it to not be their fault. I don't care whose fault it is if my entire town gets burned down because we don't maintain our infrastructure. Everyone wants to say, oh, I don't want to be responsible. Guess what? We're all responsible. And so I'm involved in a member-owned co-op where that cost would fall on all of my constituents and all of my voters if the utility were responsible. But we all need to be responsible for clearing the right-of-ways and making sure that trees don't fall on lines. I think a more elegant solution for private property is to say, hey, as a utility, we're going to go remove trees that we think could impact our facility. If the private property owner says no, then they need to sign a document that says, I realize I have a risk, And now I assume that liability for the risk of trees falling on lines, if they refuse to have lines cleared. Absolving people of responsibility for large-scale forest fires is not a solution that keeps anybody's community from burning up. It's a big deal. My community's been endangered multiple times. Someone has to be responsible. Thank you.
I appreciate those words, and I really look forward to this conversation this summer. Couldn't agree with you more. We will do that in the summer, and I look forward to that, and Jesse will invite you to be part of those discussions.
I'll be fishing.
I will entertain a motion to adjourn. And all in favor? We got to do a voice vote. Just kidding. Thank you.